The decline has erased gains for newcomers who had bet their pocket change, credit card lines or, in some cases, second mortgages on one of the most hyped investments in decades. Websites and apps, such as the popular Coinbase, made it accessible to buy Bitcoin on a smartphone and credit card while waiting in line at the supermarket, turning everyone from school bus drivers and iron workers to students and homemakers into amateur crypto day traders. Because crypto can be bought in fractional amounts, regular people can buy in for just a few bucks. Experts cite a perfect storm of factors now driving down the price of the Bitcoin. Regulators are starting to make noise as the crypto craze and the eye-popping gains, over 1,000% for some coins, have caught their attention. Even small moves from governments can set off a panic, as in South Korea when rumors spread that the government was going to ban cryptocurrency trading entirely. Later turned out that the government will allow such trading to continue, but will prevent people from being able to do so anonymously. On Tuesday, news that U.S. regulators sent subpoenas to the virtual currency exchange Bitfinex and sister company Tether contributed to a 10% decline in Bitcoin prices that day, Bloomberg reported. Regulators in other countries, like India, have also added to the spate of reports. For long-term holders, that's just part of the business. As the crypto market's rising popularity draws inevitable attention, crypto investors will just have to get used to more critical headlines from regulators, Kohler said. And for the past 3 years a cryptocurrency slump has occurred in January, which some experts attribute to Asian customers pulling money out the market to buy gifts during Chinese New Year. As selling increased, a buyer strike contributed to the price declines, Ronnie Moas, founder and director of Standpoint Research, told NBC News. The rug was pulled out from under Bitcoin, Moas said. There were a lot of people trying to get out, from people who lost a lot of money in the past few weeks who decided they couldn't take it, or people who made a lot of money who got in a year ago who wanted to lock in gains before they evaporated. Customers who used a stop-loss mechanism, which are automated orders to sell when the price falls to certain lows, could have steepened the slide as well. That selling can in turn trigger further automated selling. There's also some question of whether Bitcoin will remain the coin of the crypto realm, and the one most investors put their cash in. Other currencies, especially Ethereum, have been catching up to Bitcoin's $140 billion market cap, adding further uncertainty and churn. Despite the stomach-churning dips, Moas remains bullish on Bitcoin. It can go to $100,000 and it can go to zero, he said. You wait until the coast is clear. You'll have to pay $50,000 in order to buy, and if you can't deal with the risk, reward and volatility, then put your money in a AAA bond, he said.